Hello, everybody. Welcome back to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. If you've seen this show before, you know we don't just talk about stocks. We talk about companies that have earnings announcements and trading around those earnings announcements. Okay? How to make money trading earnings each and every week. So this week, the week of June 15th, 2026, this is a lighter earnings week. Right now, as we head into the end of June and early July, it'll be kind of quiet. But make no doubt that there are some very important earnings coming up each and every week. Even though the number of earnings is small, like this week, there's like 70 companies declaring earnings, and we're only watching 10 of them. But some of these 10 are very important. So, with fewer catalysts on the calendar, traders should expect greater focus on individual earnings stories rather than broader market themes. So we're going to go through our list, take a look at the best potential candidates for trades, along with a trade update about last week's trade. You're going to want to stick around for that. And also a new opportunity for you. And also a few words on SpaceX options, which are coming sooner than you might think. So stick around. Here we go. Each and every week we talk about earnings, and normally there's quite a few, and we talk about the key ones, the bigger large cap, and sometimes we get into the mid cap stocks. But I produce a list each and every week that looks like this. On the left hand side, we have stocks that we call breakout stocks. On the right hand side are a list of stocks that are quiet stocks. Now, what's the difference between the two? Well, breakout stocks tend to move double digits through the earnings announcements. And again, I don't care what's happening before. We're just focused on the earnings announcements and what happens right before and after that announcement. Okay. So these stocks historically move greater than 10% through those earnings announcements. On the right hand side, we have our quiet stocks. And these are usually companies that are so big that they usually don't move very much through the earnings announcements. It's hard to move these stocks through earnings announcements. We're talking single digits. They may move 4, 5, 6%. Okay, some do get a little higher, around 8% maybe, but many of them are, believe it or not, are 5% or below. And we have a certain strategy that we trade for those, as well as the breakout stocks, different strategies. But let's talk about these for a moment. We're going to start with the quiet list, and let me start with an example. Now, each and every week, I've been talking about Pfizer for weeks, okay? But I wanted to change it up this week and talk about something that we trade with a lot of regularity, and this is McDonald's, okay? Now, you can see that McDonald's moves around quite a bit, but that's between earnings announcements. I've got the earnings announcements highlighted here with a red dotted vertical line as well as an ellipse. And believe it or not, McDonald's moves less than about 4% through each and every earnings announcements. That's usually about the expected move, just 4%. In fact, that last earnings announcement that you see there, that drop that looks very volatile, no, that wasn't very volatile at all. That was a 2.5, I believe, 2.5 or 2.6% drop in the stock, which was well within the expected move of the stock. Okay. And we derive these expected moves from the option pricing itself, what the options markets are pricing in to the options for the expected move of the stock. Okay. It's like a little secret a key to the future in some respects. Okay. So let's take a look at our quiet list for this week. And you're going to notice just how quiet it really is. Okay. No qualified stocks today or tomorrow, but Wednesday we do get into a couple of good candidates. Now, Progressive, it's a notorious quiet stock. We're going to talk about that in a moment. Jabil, which could be a little more volatile this week. Kroger and Accenture. So let's jump over to the chart and let's talk about these for just a moment. We're going to start with Progressive. Okay. Progressive is going to declare earnings on Wednesday, June 17th, before market open. The average move here, including the average expected move, is about 4% for Progressive. In fact, you can see over these last few earnings announcements where I have the vertical dotted line here, you can see it's, nothing really noticeable. Maybe a little volatility. Believe it or not, this gap was not earnings. Okay. This gap was, but this was, believe it or not, just about a 4 to 5% move in the stock. Okay. And again, at with Progressive trading right now at around $200, this is a right in our wheelhouse for the strategy that we trade around earnings, and that strategy is an iron condor. Okay, we sell premium. These stocks get inflated IV, so inflated implied volatility going into the earnings announcement. We sell that expensive IV on these quiet stocks. All right, and we just want the stock to stay in that range. Okay, and it happens more times than not. Occasionally, we do get in trouble a little bit. And I'll talk about that in just a moment. So you're going to want to stick around and what happens when things go wrong. Okay. We're going to talk about that in this show. Okay. So we have Progressive on Wednesday. Now, also on Wednesday, we have Jabil. Now, Jabil is a little bit more volatile. It comes in with an average expected move of about 9%. So Jabil will also announce earnings results on Wednesday, June 17th, before market open. And I would expect this. We're probably going to avoid trading Jabil around this earnings announcement, even though through earnings, okay, like we have right here, this is very quiet. These very quiet earnings announcements. But because of the sector that Jabil is in, we could see a little bit more volatility. So we'll just kind of sit back and watch. Why? Because there's some other good opportunities. Well, one like Progressive. Okay. Kroger. We have traded Kroger quite a bit. Okay. It will declare earnings on Thursday, June 18th, before market open. And the average move here is about 5% for Kroger. All right. Now it's getting down there in price. It's $64. That still meets our criteria. We really like stocks that are $50 and above to trade these iron condors on. So the fact that this is still a roughly $65 stock, it still may qualify. So we'll look at the opportunity for Kroger for our subscribers, and we'll possibly do a trade there. But it's normally a pretty quiet stock. And our last quiet stock for the week is going to be on Accenture. Excuse me. Accenture will declare earnings on Thursday, June 18th, before market open. And the average move here is about 6% for Accenture. So also a notoriously quiet stock. Given that it's trading in the mid 160s, great candidate for how we like to trade these opportunities with quiet stocks. All right. So believe it or not, you'll notice that really our week ends on Thursday. And that is why, and I'll go ahead and remind you that this is a holiday shortened trading week. Okay. Markets will be closed on Friday, June 19th. Okay. For a federal holiday, which is Juneteenth. And so we have a nice shortened week this week. And so you'll only see opportunities that are Monday through Thursday. Okay. So speaking of which, let's move on to our breakout stocks. Okay. Now, breakout stocks are a whole different animal. And what we like to do with breakout stocks is trade a straddle or strangle. So yes, we're buying higher implied volatility, but that's because these stocks tend to really move. Now, you can see here that Akamai is my example. So Akamai and McDonald's, okay, they don't have earnings this week. These are just examples. Akamai recently had earnings. Okay, in fact, that earnings announcement that you see there on the far right-hand side, that was a 25% move in the stock. The average expected move for Akamai is 15%. And you can see why. We trade straddles or strangles. Yes, buying a straddle with an expected move of 15% seems like that might be ridiculous, but this is why you do it. Okay. Because you get these big pops that are just outside of the normal expectations for the stock or outside disappointments for a stock when the stock craters. Okay. So that's an example of a breakout stock. And we have quite a few on our list this week, even though this is a holiday shortened trading week. So you can see here that we actually have 3 stocks that are trading today that will have earnings all after market close today. And then our last breakout stock opportunity will come on Wednesday. So let's jump over to the chart here. Well, let's talk about these for a moment. Okay, beginning with Dave and Buster's. The symbol here is PLAY. Now, this stock is a regular visitor to our high implied volatility or our high statistical volatility list. Statistical volatility is the volatility you see on the chart. That's SV, statistical volatility, and also known as historical volatility. And it's a normal visitor to this because this stock will usually move big right after their earnings announcement. In fact, the average expected move is about 15%. Now, getting down to it gets a little tricky when it's a $12 stock, okay? Because they do build in the premium, although the trades are less expensive. The straddles and strangles are less expensive. In fact, here you might get away with getting a straddle or strangle for about $2 or $3. But remember, that's two. Let's say it's $2. That's $2 on a $12 stock. That's expecting over a 20, almost a 20% move, like 16, 17% move. And, it's getting a little hard to trade. I priced this out this morning and it just did not look pretty good, but it's a fun stock to watch. Okay. Around earnings, 15% mover there for Dave and Buster's. Moving on through the list, we have another inexpensive stock trading around $14 here. Quantum, we have the same problem with. They will declare earnings later today, June 15th, after market close. And the average expected move here is 20%. Okay. Again, same thing here, looking at options. We're looking at over $2, like $2.50 which is expecting a 20% move in the stock. Okay. And the odds just aren't in our favor in that scenario. Okay. So they will declare earnings later today. Look at this; they're up 7% through the first part of the day and today, and we haven't even gotten to the earnings announcement yet. But that will be fun to watch, and also fun to see how the stock reacts around earnings. Okay, now the last stock for today is going to be RF Industries. Okay, they will declare later today, June 15th, after market close. Average move here is about 12% for RF. Again, another sub $20 stock. Definitely one to look at. I priced it out earlier. Pricing really wasn't there, but always good to look at these inexpensive stocks because they usually you can get these trades for under $500 or $5, which are great for smaller accounts. Okay, so these sub $20 stocks are great for smaller accounts if the option pricing is there. Right now, it's not, but we always keep looking, okay? And again, it's all about how the market makers are pricing in the options for the expected move in the stock around earnings. The last stock that on the volatile list this week is going to be CarMax. Now, CarMax, take a look at this run it just had, okay? I mean, just going vertical. And then today, we're having a day of indecision. Look at that candle right there. All right. That is an indecision day, meaning we could see a possible change in trend with the stock, but we're not worried about the overall trend. We're just worried about the earnings announcement, which will be revealed on Wednesday, June 17th, before market open. Most all of except for today, everything else is before market open, except for the stocks on the volatile list that we just talked about that do it after market close today. But everything else is before market open this week. Okay. Now, So that is Wednesday before market open. And believe it or not, it's coming in right around 11%. And here's the thing, um, with the average move here, this last earnings announcement, that drop right there is a 15% drop. And then look at that, it dropped again the next day. So if the market makers are pricing in for an 11% move and the stock moves 15%, that's where we make our profit on these. Okay. Or if there's some follow through to the downside, like we got here in the next couple of days after the earnings announcement. All right. Well, the thing is that CarMax, I priced these out this morning, and believe it or not, they're coming in right around 11%. So that might be a little opportunity there on CarMax, even though I'll give you a heads up, it's not our trade of the week. So before we get to trades, because I do want to talk about our trade from last week, and I do want to talk about our trade opportunities for this week, I did want to talk to you about a company that's not having earnings, but is still on our radar, is SpaceX. Okay. So as most everybody knows, SpaceX IPO'd on Friday. Today, it's having a great follow through day, up 11% so far today. But here's the thing. Options will be traded starting tomorrow morning. Okay. Options on SpaceX will start trading tomorrow morning, Tuesday, June 16th. And we're talking from all regular cycles to even zero dated. I would expect weekly options will be a thing, but market makers will be scrambling to set pricing on these. And we could see some opportunities emerge as pricing kind of, they're not really sure what to expect here. I would imagine we would have some extremely high implied volatility here. There could be some opportunities, and we will be watching for SpaceX options, which will appear tomorrow morning on Tuesday, June 16th. Okay, so just a little side note on really the biggest IPO ever, which occurred on Friday. This is the biggest initial public offering for a company ever, and it's having a good follow through today. So with that, let's move on to talk about our trade from last week. Okay, because it didn't go so well. And what did we do? This was on Adobe, and the trade setup was ideal. Look how much you can see the horizontal dotted lines in the chart. Okay, not the risk graph on the right, but the chart on the left. Those horizontal lines kind of flow over. I love it when they encompass all the stock movement from the past month and a half, 2 months. Okay. This was a good opportunity. What happened with this? And I'm going to show you what happened. I'm going to tell you why it happened. Okay. So let's look at the results. And the results were not in our favor. Okay. We actually took max loss on the position. Now, this is an iron condor. So how this works is you have a call spread on top that you sold. You have a put spread on the bottom that you sold. There's a credit for the call spread. There's a credit for the put spread. You combine those credits together, and that is your credit on the trade. Your risk in the trade is the width of your strikes, not between your call spread and your put spread, but between the call that you bought and the call that you sold, and also the put that you bought and the put you sold that you sold. In this case, it was $5, meaning you don't get charged twice for margin on these. You just get charged once. So you take the width of your spread, which was $5, minus your credit. So in this case, it was $365 was the max risk in the trade. Now, here's the thing. The stock moved the estimated move that we were expecting through earnings. So how did this go so wrong? Well, normally with these iron condors, I place them literally either one day ahead or the day of earnings. Okay, so if earnings are after market close, I'll place it the day of, or maybe the prior day to earnings. For Adobe, we placed this trade on Monday. Earnings weren't until Thursday. And in that time, from Monday to Thursday, the stock dropped 13%. Okay. Now, then you have the earnings announcement, and had the stock gone up through earnings, okay, if it had gone up, and I'm just double checking the number there, if it had gone up 6.5% instead of down 6.5%, which is within the estimated move through the earnings event, this would have been a profitable trade, but it went down. So it not only did it move down 13%, but then it added another 6% to the downside. That's where we got in trouble. Okay. And that is why I'm going to make a little bit of a change for our earnings club members. So, which is earnings club is where we take these trades that we do every Monday and I send out an alert to you and I follow it up with commentary and or exit instructions each and every week. So I told you how to exit this trade, which was actually do nothing. Can you believe it? We took a max loss and we didn't have to do anything to it. Okay. And I go through why we just left it alone, just let it expire, all legs expire, didn't have to have another commission trying to get out of it. There's reasons why we did that. And we took advantage of that. Okay. So, what I'm going to do for iron condors is trade them like I normally do for our other subscribers. I'm going to show you a trade for this week right now, which is another iron condor. But I'm actually going to, it's priced as of today, but I'm actually going to put it out to our subscribers probably tomorrow, okay? Because it doesn't have earnings until Thursday, okay? So let's take a look at our trade of the week this week. It is going to be Accenture, all right? And you can see this nice wide iron condor here. We are selling premium on Accenture. And like I said, we're going to wait a couple of days because of that movement that could be happening. It's okay to wait. Even though time is going by, we also have a rush in implied volatility happening. So I could actually get better pricing tomorrow rather than today. All right. So tomorrow we'll be trading this. Accenture has earnings Thursday morning. So if we do it tomorrow, then you would have tomorrow to get filled or Wednesday to get filled. Okay. I might even wait till Wednesday, but I'll put it out tomorrow just to make sure that everybody sees the note. Okay. And this is an iron condor on Accenture. Again, selling a call spread on top, selling a put spread on the bottom, receiving a credit. And that is our trade for the week. So next week, on next Monday, we will be right back here to talk about earnings next week. And yes, the number of earnings is pretty light, but there are some big companies, including Jefferies, which is a big financial firm, FedEx, which is always on our list, Micron, okay? Micron Technologies next week. So just as a little heads up, next week you're going to be wanting to tune in as well, all right? So short trading week this week. It's a holiday shortened trading week. And SpaceX options go live tomorrow. And then I'll be right back here next Monday to talk to you about how we did on our Accenture trade. Everyone have a great trading week, and we will see you right back here next Monday. Take care.